The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Stock of the day is oohMedia. This is after the company is cutting costs by at least $15 million, citing challenging trading conditions in its latest trading update. It is Australia's largest outdoor media company. It also downgraded its fourth quarter revenue growth, says it's expecting underlying earnings for calendar year 24 to be between $125 and $128 million. And if we take a look, in fact, take a look at its revenues, somewhat lower than what we're seeing for the broader market at the moment. With their previous update, they've grown by 3%, compared with the broader market there of 8%. And management is essentially having confirmed that there were market share losses there. So how do we view this particular space? And I guess the difficulty, in outdoor advertising at the moment in terms of advertising spend. Sanjee, what's your view?
Yeah, well, I mean, looking at last year's figures, 600 million in sales and 34 million in profit. So it gives you a good idea of how much actually went into expenditure. Now, cutting down 15 million, is it really going to make such a huge difference? A company like this, the returns haven't been that great. I mean, return on equity is consistently pretty low, under 10%. They haven't been growing their earnings. So, and they do carry quite a bit of debt. So when things are hard, like they're acknowledging that it is right now, they don't have many levers to pull to navigate through this. So I think they'd end up feeling quite a bit of pain before things get better for them.
All right, so what would you do with the stock then?
For me, I'd be selling.
Okay. All right. Mark, do you agree?
Yes. Basically, I had this back in August as well, and at the time it looked cheap then. Management is literally doing all it can possibly do. So, kudos to management, and I don't think you can blame management for, they're really getting ahead of the fact that they know that it's a much tougher advertising market. You've got the likes of Nine Entertainment Group, where they've now got a multi-channel platform to be able to, pinch that advertising spend, and even looking at our marketing spend at NPC, Google ads and social media ads, etc. You can target a demographic, you can get return on investment, what you're paying per lead, etc. With this, it's you're kind of trusting their it's X amount of people walk past this billboard a day. So,
but does that mean there's sort of been some sort of structural change underway as well, that outdoor advertising simply is not as effective as it was because it's all now about targeted advertising?
Yeah, I don't know whether that's the problem. I guess you can't say whether it's less effective or more effective because there's no quantifiable metrics. So and that's been fine in the past because you had TV, which also didn't have any quantifiable metrics, or very loose quantifiable metrics. But you do Google or Facebook ads now, you know exactly what you're spending, and I think a lot of management and management teams really like to be able to control that. So that's a really big headwind for them. And like I said, management's doing a great job, managing that structural change as it stands. I do think there is a massive place for outdoor advertising, and I do like the initiatives that they've been doing with. Obviously, they can now remote change the billboards, and obviously they might be able to start to be pulling some data on that base. But but it's looked cheap for, I think it was $160 then. I said it looks cheap, but I'll wait and see. Now it's $117. $1.17. So I'd still wait and see. But if I had it, I would have probably sold it already. And yeah, I don't think you need to be there right now. This thing will have an uplift when the economy's booming and there's a real bull, a real economic bull run. But if we have any sort of potential recession risks or whatever, this is not the place to be. I think you're probably better saving yourself the grief and just keeping it on your watch list. So sell, yeah.
There you go. Beginning with a negative, it is a double sell for our stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.